Hey everybody, it's Dale Marsh here, lead buyer specialist with the Santa Sells Houses team, and I'm joined today by
Eric Gagne, our insurance guy representing Town and Country Mutual Insurance, and I am here to answer all
insurance inquiries. Today's question for Eric is, what concerns or liabilities are there with rental properties?
rental properties. They are a different breed of homes altogether.
They can be, for sure, yeah.
Yeah, with London being such a student-based kind of area, we do see a rise in rental properties, people using them for extra income. The biggest things that we find with rental properties are slip and fall claims, so making sure that you have somebody there that can adequately take care of a parking lot, snow maintenance, clearing, melting of ice and making sure you get salt down.
Yep. Do video cameras help with either your home property or with rental properties to help reduce any liability in that case?
They can be there to show if there was any wrongdoing going on, but essentially what will happen is if you're held liable, and negligent, it's going to be really tough. The other one is making sure, if you're a landlord, making sure you have enough liability insurance on your rental property.
What would you recommend?
So at least $2 million. There's a lot of commercial properties out there that have $5 million liability or more than that. It's really depending on how much you're exposed when it comes to liability insurance and with rental properties. Sure. Again, it's a situation where these properties can have higher claim frequencies. So making sure that you have enough coverage for the home, the landlord has enough coverage for liability insurance as well too. Again, that's a concern with rental properties, is you have a number of people using the property. You as a landlord, you're not on site, or most likely not on site, that you're not really in control of the situation at all times.
Are there certain areas like around universities and colleges that are typically flagged as higher risk because they're generally student rentals?
Yeah, so definitely in the Fanshawe area, UWO area. So when we have those situations, especially with student rentals where we have no supporting business, at Town and Country Mutual, we usually do a commercial insurance policy, which is indicative of somebody having rentals, they're generating business income. So we put them on a commercial lines policy.
Okay.
Typically, there are lots of markets out there, substandard markets out there, that will insure student properties that are not in ideal locations.
I assume rates for a student property are typically going to be a little bit higher than your average. Just say you have a family renting a single house,
for sure,
because it's higher turnover, maybe a little more damages to some walls or flooring
for sure, yeah. Whatnot. So it's always indicative of being a higher risk kind of business. Student rentals typically, like I said, they have a higher frequency of claims. So it's held into a different class of its own versus if I just have a rental with a family, a single family living in a rental property.
Right.
Those definitely get a much better rate than what the student rentals do, for sure.
And we should mention as well, I know Eric does insure some high-rise apartment buildings as well, correct?
Yeah, for sure. So again, that's a situation there where, the building itself is insured. Obviously, the contents for each unit is going to be the responsibility of the tenant in there.
Right.
But yeah, we offer great rates for builder's risk for commercial buildings, like you just said as well.
Right. So that's a good point as well. So if you are a tenant renting, then you should also have content insurance, right? If you ever have theft, fire, flood, you want to make sure that your possessions are taken care of if needed, right?
For sure, yeah. It's very inexpensive. We're talking, $200 a year or $20 a month will give you the basic coverage that'll kind of piece you back together if you are in a situation where you've had a loss, you need your clothing replaced, you need any electronics replaced, and then additional living expenses. So if you have to pay to live somewhere else and it's going to cost you more to live somewhere else, there's coverage in your policy to top up in the event that you need to be compensated for having to move out of the residence you were in.
Right. Good point. Thanks for watching the video today.